Okay, what's good guys? Welcome back to your favorite YouTube channel. So today we'll be talking about how to create a trading plan. Now it's gonna be a slightly different video. Normally I'm on the charts breaking it down for you guys, but today a bit more personal, a bit more face to face, or should I say camera to face actually, because it's not actually your face there. But yeah, a bit more face to face. And I know some of you in my live streams do ask to see my face more because you see my cheek. So yeah, today's your lucky day. You can see my face in all its glory. But besides that, I do have a video for you about how to create a trading plan, and I'll break it down into 7 sections because in my trading plan I've got 7 sections. 7 sections to create my trading plan. In each section I'll discuss what I have in there, what I recommend you guys should have in there, what you need to have in there, and yeah, hopefully you can take some value from this video and create a trading plan from it. So without further ado guys, like, share, subscribe, all that good stuff does help the channel out, join the family. But without further ado, let's get straight into the video. Okay guys, so section 1, massive section, you want this right at the top of your trading plan. It's purpose. I know this is a little bit cliche, your purpose, your why, but it is so crucial because most people's purpose in the markets is to make money. I mean, whose isn't, is to make money, but I know from experience that when my purpose in the market is to make money, yeah, I generally lose money. You know, how ironic is that? It's quite weird. But yeah, when your purpose is to make money, you have the wrong mental state when you approach trading, because you're always going to be focusing on the money rather than the actual skill of trading. Because every time you flick open your charts, you're going to be focusing on your account balance. How can I get that up to date? That's what you're thinking. What pair, what instrument should I be getting involved with, buying or selling, to make that balance go higher? Whereas you should be focusing on, can I find the best setup that matches my strategy today? If I can, cool, let's execute. If I can't, you know, we fold our arms and we walk away. And that's the mental frame, that's the mental state you want to be in, not can I get my money up? Because if you're focusing on the money, yeah, the money's going to decline, and we don't want that. So yeah, purpose, huge. You need something, you know, more than money. You know, what can trading do for you? Is it freedom? Is it buy the things you want? Is it go to the places you want to go? Is it going to allow you to do the passions you have in life? Something like that. You want your purpose, the thing that will drive you forward through the down days. So purpose, section 1, we want that right at the top. Make it clear, concise, detailed, and yeah, that's the start of the trading plan. Alright guys, so I'm going to move on to section 2, which is strategies. Now this is everything. You know, this is how you're going to approach the market. This is how you're going to make your money. This is your bread and butter. You know, you want to have this in as much detail as possible. And the key things you want in this section is entry criteria, exit criteria, and a step-by-step approach of a step-by-step method of how you're going to approach the market. Because you want to approach every time you flip open your laptop or you get into the charts, you want to analyze the market the exact same as you did previously, and in the exact same order, looking out for the exact same thing. So you want all of that listed in a row, how you're going to approach the market, and at the end it's either your entry criteria, or if it's not met, you fold your arms. So you want to have that all in order so you can work through that. And either at the end of that, it's going to lead you to an entry to a trade, or it's going to leave you to do nothing because there is no trade. So you want that in as much detail as possible, and all you have to do is follow it. Because I see so many people jumping from strategy to strategy, and I did this as well. And it was like a professional high jumpers or something. The way you're just jumping into conclusions as well. And you know, you want to leave that to Olympians. You don't want to be jumping from strategy to strategy. There's one thing in life you don't want to jump, or at least not jump too soon, is strategy. You want to stick it through to the end, because that way, if it doesn't work, you know it's the strategy, not yourself. When most of the time, 95% of the time, it's actually the trade and not the strategy. So you want to have that in as much detail as possible so you can just follow it, read it, and execute. And that's what you want to have in your second section. Okay, so now we're going to move on to section 3, another huge part of your trading. It is trade management. Now this is crucial part of your trading. You don't want to freestyle trade management, because you know, if you want to freestyle, you know, grab a mic, get some beats going and spit some bars. You know, you don't want to freestyle on the market, because the market's going to freestyle on your account balance, and we don't want that now, do we? So you want to have everything in place of how you're going to manage your trade and under each circumstance. So saying your profit and price starts to pull back against you, you know, you need to understand what is your approach to this. Do you have a trading stop loss? Are you going to wait for it to take you out break even? Are you going to take some partials off? Is there a certain technical tool that you're using, moving averages, I don't know, fib, or just drawing out key levels of support and resistance? You're going to wait for that to break before you exit the trade completely. You need to have all of that mapped out so you don't freestyle, you know, in the moment, because all of that is just thoughts and emotions, and thoughts and emotions are not consistent. Trading plans are, and that's how you're going to survive in the long run. So yeah, have all of that mapped out, and then it will avoid all those, you know, stressful thoughts and feelings, and taking profit when you shouldn't, and leaving profit on the table when you shouldn't as well. So have that all mapped out in as much detail as you can. So all you have to do is flick to your plan, and you know exactly what to do. Okay guys, so now onto section 4, which is risk management. Now this is crucial because a big part of traders, you know, our job description is to manage risk in the live markets. That's what we do. We manage capital in the live market. So if you don't have a very good risk management plan in place, you know, you're going to fall on your face pretty soon in the market. So this is a very, very key thing you need to have to be rock solid. So when the bad days come, you know, you can get back up, right on your feet, and go again. And the 4 main things you want underneath your risk management section, well, you could probably have more, but these are the 4 things that you must have, is percentage risk per trade. So whether you're risking 1, 2, 3% or 0.5%, whatever it is, you know, have that in place and be consistent with that. Number 2, your trading limit. So how many trades you can take per week, per month. You want to have that in place, because it's all well and good risking 1% per trade, and that's very, very sustainable. But if you're taking 100 trades per month and risking 1%, you have the opportunity to be down 100% of your account and blown the account, you know. So you want to have a limit for how many trades you want to take a week, a month, maybe even per day if you're more of a lower time frame trader, scalper or day trader. So you want to have that set limit in place to protect your capital. Number 3, how many trades you got going at once. You know, if you have 10 trades going, all a percent down, that's 10% down. Your psychology is going to be playing up, you know, big time. But if you only have 1 or 2, then you can have focus, clear focus on those 1 or 2 setups that you got going, and it will keep the risk down. And 4, you want to have your max drawdown. So what point of your capital, or percentage of your capital I should say, is it when you actually reevaluate your plan, reevaluate your strategy, and just reevaluate your whole approach to the market? What percentage of the capital are you going to do that? Is it, you know, 20%, 25, 30, 40, whatever it is? Oh, sorry, my voice just went a little bit there. But yeah, whatever it is, pick to it, stick to it, and you know, whatever the drawdown you have, as long as it is not to the max drawdown level, you know, you just want to be clear, follow your plan, execute, and keep it going until you get to your max drawdown. And if you do, then you want to reevaluate, you know, your plan entirely. But yeah, those are the 4 things you want to have all written down in detail, understand fully, and then all we have to do is execute in the markets. Okay, so now on to section 5. Now we've done trade management, we've done risk management, and now we're on to self-management, management of you, self-management. Now this is a huge part because strategies work. You know, pretty much all strategies work. If you play them out of a big sample size, they will probably come out on top. Obviously I haven't tested every strategy, but I do believe they will come out on top. But it's up to the trader to actually execute and actually come out on top. And all of that is based on your decision making. You know, you need to manage your decisions, manage yourself to be consistent. And if you're consistently making the wrong decisions, it's not really the strategy's fault, it's your fault at the end of the day. So you need to be able to be on top of yourself. Now, the best way to make the correct decisions is to be in a very neutral, you know, balanced mindset. You don't want to be fearful, you don't want to be greedy, you don't want to have the want to make money, you don't want to have the want to lose money. I'm not sure who would have that, but if you do have that, you know, you want to lose that as well. You want to be as neutral and as balanced as possible, and as a result you want to have things in place that will make you in that neutral mindset. For me, whenever I do take losses, I do try to take a few hours off the market before I do come back in with that refreshed mindset. And also reading through my plan does help me focus on the long term of what I'm trying to do in the markets and ignore any thoughts and feelings that may affect my trading and my trading performance. So doing those things do help me keep in a neutral state of mind. And also, if you do have any things that are going on in your life that is stressful at the moment, friends and family, you probably don't want to trade or be able to disconnect from all of that when you do trade, because all the anger and any emotions you have in your life will creep up into your trading. If you take a loss, you've got the anger from what's going on in your life plus the anger of a loss will create more anger, and that could burst out into the markets and you just deviate from everything and go lose more money, and more anger will come from that as well. So very, very ugly situation to be in. So yeah, you want to make sure you're blocking, disconnecting from things in life outside of trading, and also having things in place that will make you in that neutral mindset. So up next, we've got section 6, which is routines. Now, routines, crucial part. I've said that about every section, but it is very, very crucial. Routine, because routines, basically make up your life. Driving, brushing your teeth, brushing your hair, going downstairs, breakfast, dinner, all of that, all based on routines. And the markets is going to be no different. It's all going to be based on routines as well. So it's important to have a good routine in place, because either your current routine takes away from your trading or it adds to your trading. So it's important to have a good routine in place to make sure you're making the right decisions at the end of each day. So when you're creating your own routine, you want to be focusing on the timings of everything, when you're going to do what, and why as well. So you want to be focusing on the typical day in the markets, from when you get up to when you look at the markets, to how long you look at the markets, which session you're looking to trade or looking to execute or whatever in the markets. When you're going to analyze, and also when you're going to get off the markets, get the hell out of there. Because if you don't have that in place, you could find yourself just going onto the charts whenever you feel like making money, and you're just going to have that urge to get into the charts because you want to make money or make money back that you've lost. So you're going to get onto the charts and look for some opportunities, which is never the right way to go about it, because you want the opportunities to come to you. You have a system, wait for the system, wait for the setups to match the system that you have in place, and then trade. Don't go to the markets to trade. It seems quite similar, but it's a whole different ball game. And you can find yourself sitting at the desk for 8-12 hours a day, which is one, not good for your health. Your back's going to be messed up very, very well. And number two, it's not good for you trading as well, because if you're at the markets 12 hours a day, it gives you 12 hours where you can make silly mistakes. If you think about it as a broker, you want your traders to be at the markets 12 hours a day, because then you get fatigue, you get to make sloppy decisions, very, very emotional decisions as well, and that's the way that they're going to lose money. So giving yourself time away means that you can let trades breathe, let the market breathe, don't be so attached to it, and then when it's time to come back to the markets, you come refreshed and ready to go again, rather than after 8 hours and you're driving yourself crazy. So it's important to have a good routine in place and make sure you stick to it. And finally, on to section 7, we have goals, targets, cash, the dough, the dosh, the moolah. Wow, there's a lot of nicknames for money, isn't there? Wow. But yeah, as you can tell, it's all to do about the results. This is the results end of the plan of the business. But yeah, it's important to have goals, targets in place, because you can check to see if your progress is how you want it to be. But all the sections we've covered, from section 1 all the way down to section 6, all of this, with a good plan in place, following all those rules that you have in place for yourself, will sum up to section 7, which is the results, the target you have. So whether you look to get 5, 10, 15, 20% a month, whatever it is, this is the sum of everything you've done in the previous 6 sections. So if you have, say for example, 10% a month target to hit, and you achieve 8%, it's not the end of the world, you missing on that extra 2%. You don't need to change your strategy or change everything. just by missing out your target by 2%. It means that maybe you can look for some things to maybe improve upon. But even with that, you know, there's normal fluctuation in the market. Sometimes you will do better in some months, some you do, you know, better in some weeks than others. You know, you have that fluctuation. It's natural. So don't get too invested if you don't hit your target and change everything and throw everything out the window and shift your plan completely. There could be some things to improve upon. In fact, there always will be. But the targets we have in place are just to make sure, you know, that we are still making progress. So we can check through each month, each quarter, each year to make sure we are moving in the right direction. And that's the purpose of the goals, of the targets, of the results section that we have here. And you mainly want to be focusing on, you know, the lowest you want to go is monthly. You don't want to be looking at goals per week or per day. In my opinion, it gets way too hectic in there, and you need to allow some room for fluctuation. You know, if you have a goal every month, you know, it leaves you room to have a bad week each month, really. So you're not too stressful and worked up about your losses that you're not going to achieve your goals. So yeah, a monthly is good. Quarterly even better, gives you a lot of room to work with. But yeah, monthly, quarterly and yearly goals you want to have to make sure you're moving in the right direction. Again, you can play around with these. You know, if you feel like, you know, if you're just coming into trading, maybe have like 5%, and then you can build up from there. Or if you've got more experience, then you can probably challenge yourself and go for some higher targets. But the goal section is just primarily to make sure we're on the right track and our trading is progressing. So you want to tick these off, and, you know, I would say give yourself, you know, if you were looking at monthly, give yourself kind of like, you know, 4, 5 or even 6 months to see how you progress against your targets before you make any big changes in your plans, because there will be fluctuations. You know, you could experience 2 months not hitting your targets, and the next 2 months you do, you know, way better than your targets, and then they average out to the target you want. So I would say give yourself a few months before you start to make any big decisions changing your plan. But yeah, focus on monthly goals, monthly targets you want, or quarterly if you want to give yourself a bit more room. But yeah, that's the final section. That's the final part, the final section of the plan. So, you know, 1, 2, 3, 4, 5, 6, 7 all equates down to that 7th. And, you know, at the end of that, if you have all that written down in paper, or you write it on your laptop, you know, that is going to be your plan, and you want that as your Bible to always refer to that with whatever you do. So you make sure you're making the right decision, you know, at the end of the day. But I hope you guys have found this video useful. You know, if you need to pause it, write things down, any questions you have, you know, want my opinions on something, let me know in the comments and I will get back to you as always. But if you have enjoyed it, please leave a like on the video, you know, comment down below if you have any questions, or, you know, you just want to say great video. I do appreciate that. And also share, you know, so more people can see the information as well. Subscribe, hit the bell so you don't miss out on any uploads in the future, or any streams as well. But I do hope you guys have a beautiful day, and I'll catch you all in the next one.